Good morning, traders. This is Chris Buss with your Daily Profit Compass for Tuesday, September 29th. Okay, before we get into the charts, got a couple programming notes for you. Number one, I've got an appointment this afternoon at 2:30. It's unlikely I'll be getting back before the bell. So anyways, I'll be stepping off the desk around 2:15, and then I will come back after the session and do a recap on it. Second of all, I've been a little disappointed in the resolution of the videos that I've been doing. Seems like they're a little bit fuzzy. I've been trying to work with the company that does the recording software to try and get it figured out. I'm sure it's just a setting somewhere that I've got messed up, but I'm looking forward to having these videos be a lot crisper and easier for you to read off of the screen. So I apologize about those difficulties, and I'm hoping to get those resolved quickly. And I think you'll know it when you see it. I hope I do, because I want to have really, crisp and clean videos with these technical levels easy for you to read and understand. Okay, we're coming off a big risk on day yesterday. We've got the debates tonight. I mean, equities are flat at the moment. Maybe it's going to be just kind of a wait and see day after yesterday's big move. Maybe, just some consolidation. It's hard to tell what today might bring. I know for the rest of the week we've got 2 to 3 Fed speakers every day for the rest of the week. So those always have the potential, if somebody says something or is taken the wrong way, it can cause a ramp or a dump. But those are hard to plan for. I think you just got to go level to level and not try to get too fancy with the analysis of the news flow. So yesterday, this is the SPY 2-hour chart. We had a $3 gap up, and that gap remains open here between 329 and roughly 332. It took a while to get going, but price did build on the opening gap up. So now we're here in the middle of the range between 332 and 336. If you got long, you can stay long against 332, but if price falls back down into the gap, then price would be favored to go lower to fill that gap. So I think longs are good to go above 332 and really looking for a breakout above 336 to open up the next leg up to 341.50. Zooming down to the 30-minute chart, you can see that here's the $3 gap up. Here's the $3 range that was carved out with yesterday's price action starting at the bottom of the range, working its way to the top of the range. Now, if today we were to get a breakout above this 335, you know that the measured move would be the width of this range. So your next target would be 338 on this 30-minute time frame. Always be aware of your indicators. Here's momentum. Here was the bullish divergence that we picked up on down here where price broke out. It's still rising, but now kind of flattening off at the top here. And that may mean, just some consolidation within this $3 range, or if it's a sharp pullback, may mean coming into this gap. Notice also pretty overbought on the 30-minute time frame. I wouldn't be surprised if this drops down and we get that consolidation for a couple of days. So your key levels are 335, 332, and 339. Bulls have the ball, so it's up to the bears to prove that they can wrestle that ball away and bring prices down. But everything points to bulls being in control on these shorter time frames. Qs. Gap up. They spent a lot of time yesterday back testing this 274. And I was thinking that they might go ahead and come down and fill the gap. That didn't happen. And so they built on those gains. They held the gap at 274. So if you're long, I think you're in good shape as long as 274 holds. If it doesn't, then just like on SPY, we're looking at a backfill. Your upside target, and this is a key level, is 280. If the bulls can pop 280 and hold it, this was a $12 trading range with what I call false breakdowns, head fakes, bear traps, whatever you want to call them. I consider the trading range to be 268 to 280. If the bulls can pop 280, then your target becomes 292. And, you know, once you're at 292, you're probably going up to 300 to at least test the old high. So for me, 280 is a massive pivot point for the Qs. So keep that, you know, if you've been a little skeptical that, you know, okay, it's all over, now we're going back. A move above 280 should bring in a lot of, I'll say, skeptical longs. You almost got to buy 280 on a breakout. Within this range, it's all just chop and volatility. But if they can make a move above 280, I think that really bodes well for the bulls, and that, you know, there would be a pretty fast move up to 292, because this was some thin trading over here, not a lot of resistance. So that has the potential to move very quickly in that area. This is a 30-minute chart. Shows this double bottom with divergence really well. We had a low here. We had another back test of that low, but the indicators were at higher levels. That's positive divergence. And now they've broken above this structure with a target up here towards 284. So again, I think 280 is a key on the top side for resistance. And if they can break that out, then, you know, on to 286 and on to 292. IWM had the best day of all the indexes yesterday. It gapped up, leaving this void here between like 146. Let's see what that was. 146.41 and 148. So there's your open gap. And it's sitting right here in this narrow band between 150.26 and 149.50. This is a $3 gap all the way up to 153.29. Any kind of a move higher, you know, if you're not in, I think you got to be long here against 149.50, 149, and look for that move to 153 to fill that gap. That's a nice risk-reward trade, giving it 50 cents of room for a $3 move. That works. And then at the top, you can either just cover it with the win or move your stops up and look for 154.5. And if it clears that, then 157.5. On the downside, all bets are off if it loses 149. Then it's coming back to test this gap and possibly go lower. Here it is on a 30-minute chart. You can see it made a little move inside this area here. Stay long against 149.50 and look for 153. I think that's a good trade. And then set your stop just below, say 149, 149.25, something like that. But here again, the bulls have the short-term ball breaking out of this down channel with some positive divergence working. Facebook didn't do much yesterday. It is above this 255. I think you can be long against that 255 and the uptrend line that I penciled in with targets at 260 and 263. If price loses 255, then I think you got to exit your longs. Well, depending on when you got in, but I'd be exiting my longs on a break there. Probably going to come back to this gap area down around 250, 249 for a back test there. Apple got above 114 and held it. Your upside target is 118. I've penciled in an uptrend line there that you can use as a reference. Any breakdown below this trend line is a warning signal for a possible back test here of 113, 114. But as of right now, I think you can stay long and look for 118. If they pop 118, then your target's 123. Amazon, we've been using these $50 increments to great success. Here in the morning, price spent a lot of time just below this 3150 level, finally popped above, so then you can stay long against that 3150 level. Look for 3200 and 3250 with a stop just below. Microsoft had a big pop, came back to fill the opening gap, and then kind of just treaded water the rest of the day. I think you can stay long against 208 and look for 211 and then 213. I'd be cautious on any move back below 208. Probably going to come back to this 204.50 for a back test. So I think 208 is your key support there. Netflix, similar action as with Microsoft. Gapped open, made a reach for this 495 level, was rejected, and then backfilled the open gap, came back into 480, and then found some footing in the afternoon up to 490. This 485, 495, and 505 levels are, to my eye, what the key are. The key levels. Anything above 485 is bullish. A break above 495, you can either add to a long, or if you're not long, get in, and then look for 505 with an outside chance of going up to 520 in the near future. That would be a logical place to test if the bulls were to be able to take out this 505 level. Now, if price loses 485, then the logical target is 475 and then 465. So those levels have been working really, really well. You can see even down here, this 475 had kept price pinned down. So on the way down, that will be support now. Google really didn't do anything yesterday. It was, I think, up 1%. You've got this 1465 level. If price were to break above, I think that's a nice long with a target up at 1490, then 1505, 1515 in that area. Not one of my favorites to trade, but that doesn't mean you can't trade it. Maybe you'll have better luck with it than I have in the past. But those are the levels, 1465. And if it can't get through, if there's some weakness or something happens, then it's going to come back to 1410 to retest that low. Tesla treaded water most of the day. Had the gap up, fell back into this gap, but did not impulsively fill it. Just kind of worked within a pretty tight range all day. I think a break back above yesterday's high, you could get long for a possible push up to 450, but you've got to see that prior high taken out, I think, to get long. Otherwise, you've got this open gap that would be, favored until price could jump back above to where it was yesterday on the open. A couple extra charts to show you. This is the semiconductor ETF, SMH. It's been chopping around in this $10 range, actually $12 range, 162.5 to 175, with all the fast-moving EMAs right in the middle, and price working its way back up towards the top of the box. Why don't you set an alarm at 175? If price can break out there, then our measured move is going to be $12 higher, and that puts it at an all-time high at 187. So that's going to be worth watching on that breakout. A nice trading range has been established, and if it can break out, I think that would be a good one to participate in with a good amount of upside. You can see the PPO resetting here right at the zero line. That's what you want to see. And after coming below 50 on the RSI, breaking above, that's also what you want to see if you're looking to enter a position after consolidation. The momentum starting to turn back up along with RSI, both favor higher prices. So in my system, I've got 175 alarmed for a topside breakout, and I've got 162.50 alarmed on the downside. Now, one other tidbit to offer. Since we're at the top of the range, if all of a sudden the Qs or tech or the market start to get wobbly, that's also a nice location if you want to try a short for a move back to the bottom of the box. And this is the trading range that's been established. I think with a $12 range, you can take that trade, if you're right at the top of the box, or if there's a fake breakout and then it comes back below. Those are often really nice trades to take, looking for a move back down to the bottom. So 175 is going to be important to watch either way. So keep an eye on it. I think that's a nice setup. Target. Similar in a lot of ways to the SMH chart we just looked at. We've got a well-defined range between 155 and 145, so we've got a $10 range there. Price is trying to pop out. Momentum has got a bull cross ready to execute, and RSI is on a nice uptrend line. So if this can pop and hold above 155 and the market stays constructive, my target would be 165 on that breakout. So I like that setup long on target. Last chart for you, Wynn Casinos and Resorts. This 70 level has proven to be strong support for a long time. Going back, to March, it's been tested quite a number of times. And they always, or at least so far, have always stepped in. We're currently trading 73.62. Depending on who you are and how much risk you want to, let this thing do, you can either take it long now against 70 and look for a move back up to the 200, which is $20 away, or alarm 70 and see if it comes back for yet another touch. And anything closer to 70 is going to give you a more objective trade and a tighter setup. But that has proven to be great support and, a good tactical entry point for at least a bounce. You may get a bounce into the 80 area, the 90 area where the 200 lies, or the top of the trading range at 100. But all of those are great trades. Now, if things fall apart and price loses 70 and takes your stop out, then you've got to immediately turn bearish, because after all these touches of support, if it were to break, I would imagine it would fall pretty quickly down into this 50 area, and there would be something really, really wrong in the market. Maybe another massive COVID outbreak or something like that would cause that to break and really fall. But we're at the low end of the range. And remember what we always say, you want to buy support and you want to sell resistance. Those are two good axioms that you should have in your playbook when in doubt. When in doubt, buy support. When in doubt, sell resistance. And if you do that, you'll have a lot of nice winning trades to your benefit. Okay. That's all I've got for you this morning. This has been Chris Buss with Trader's Profit Compass with a morning look at markets. I hope you liked the content. If you did, please hit the like button and subscribe to the channel. Also, jump over to the show notes and find places to register for my content and to visit the blog. There's a lot of information that should be of benefit to aspiring traders at all levels, and I hope you check that out. So until we talk next time, this has been Chris Buss with Trader's Profit Compass. Have a good trading day.